you deserve something working for you.
Right.
No matter your age. I bought my first home when I was 22 years old
Yeah.
with no clue of what I was doing. But I was tired of getting those little landlord letters. That's it.
Exactly. And paying the rent for somebody else. Yeah.
Well, there was consistently the rent is going up. That's
Yeah.
what the letter was every single time. So I thought my little payback was, well, I'm gonna move and find another place to rent.
Yeah. Same
Plot
thing happens.
plot twist.
Yeah.
It's gonna happen there too.
Hello and welcome to another episode of the Legacy Discussions podcast. I am your host, Tayisha Beard. And remember that we leave legacies and not liabilities. And here's what I want you to do today. If you have not subscribed to our channel, please like, click, comment, and subscribe to our channel today. And now I'm going to introduce our guest of the day. And it is Miss LaToya Harrison. How are you?
I'm amazing. How are you?
Doing wonderful. Well, I'm going to
Yes.
tell the people who you are,
Okay.
just a little bit about who you are, and then I want you to tell us more about who you are and what it is that you do and making this impact in the community.
All right.
So LaToya Harrison, also known as the Hope Loan Scientist, is a senior mortgage loan officer licensed in Louisiana, Texas, Florida, and Mississippi. With 21 plus years of experience, she helps families confidently navigate the mortgage process while promoting financial literacy and wealth building. Outside of her career, she enjoys baking, family life, leading by faith-based values and community initiatives. LaToya, welcome to the podcast again.
I'm happy to be here. Thanks for having me.
You are so welcome. So look, I know for sure that that bio is accurate because you and I have done business together on a couple of real estate properties that I have. And so tell people like who you are, more about the real LaToya.
Ah, man.
Yes.
Well, first and foremost, I'll be honest, I love the Lord.
Yes.
That is who I am, and that is what I find my identity in. But beyond that, He's blessed me with the ability to help people make smart financial decisions when it comes to real estate properties. And outside of business, though, I'm a mom of four amazing children. I'm a wife of 25 years.
Wow.
January will make 26 years I've been married to my husband. We were very young when we got married. I was 19.
I was going to say you look 30 years old.
That's why I love you. Okay. And yes, so I am a wife. I'm a mother. When I am not working, which is very rare, but when I am not working, you could find me in the kitchen somewhere getting ready to entertain people in my home. You'll find me worshiping at church. I love, love, love to commune with other believers and just really live a joyous life. Joy is very important to me.
Yes.
And that's my choice. Like every day, I
Yes.
choose joy. So,
Yes.
anyways, thanks
Now,
for having me.
you're so welcome, and thank you for accepting the invitation to come on the
Of
show.
course,
And
of
I wanted
course.
you to come on because not only have we done business, we've done business together with my most recent property, but you also helped my parents to refinance their home. And the way that you handled my parents, like I know that you and I did business together, which you did it phenomenally with excellence, but how you treated my parents when I referred them to you,
Yes.
I was like, okay, now I'm impressed. Because closing a loan deal, right, you can get anybody to
Yeah.
do that, but the fact that you took my parents, you handled them with white gloves, you kept them informed, you kept me informed, like that really did something to me. And I said, okay, she's not like every loan officer. She's
Come on.
different because she cares. Why do you care so much?
Oh my goodness, I love it.
Yeah.
And not only that, I just see every single person as an opportunity. So for 19 years as a loan originator, I've been word of mouth only, referral based business only, commission only for 19 years. So that's a faith walk, and you don't get there and you don't have a long career by not taking great care of people.
Right.
So I believe everybody's just some kind of way. I believe they're like family to me.
Yeah.
You know. So and every client deserves respect.
Yeah.
They deserve to be heard. It's more than just one transaction. I get so many repeat clients.
Yeah.
Because they just remember how I connected with them.
Yeah.
It's, what do I say? Loans aren't hard, but people are. And the
Yeah.
better we get at people, the better we'll be in life, the more success we'll have. So we've got to realize, how can I impact people more?
Yeah.
How can I connect better with a person in my career?
Yeah.
Don't see the career, see the people.
Yeah. What made you get into the mortgage business?
Okay, so I don't have a glamorous story. You ready for it?
I'm ready.
So, you heard I said I was married young.
Yeah.
Okay, so I was due to graduate from college, and my due date for my second child were the same day.
Mm.
So I'm like, look, you better do what you're gonna do, because I'm walking no matter what happens, right? But she ended up coming a month early, and I graduated. And right after that, I went into working at a small marketing firm. It was a little mom and pop shop.
Yeah.
And my second paycheck there bounced. My second one. Okay, so I'm fresh out of college, good and broke. Okay, young mother, young wife, and oh my goodness, like that turned my world upside down. And the owners were just so precious. They were like, "Oh my God, I'm so sorry. I know that this is devastating. We're gonna make good on it." And eventually they did.
Yeah.
But that day, she handed me a card. She handed me a business card. She says, "Here, I know you need something now. Take this card." So she gives me this business card, and it is a temp agency. I called it immediately. I've
Yeah.
used their phone to call it. And that day I scheduled an interview. The next day I went and took some tests. The next day I got a job at Wells Fargo
Wow.
as a loan registrar. So we were registering loans, pulling the credit reports, kind of getting them all stacked up for underwriting. And I've been in the industry ever since. That was back in '03.
Yeah.
Yeah. So it's
So
been a minute.
it has been a minute. So how did you navigate through like '08 to 2010? Because that was pretty challenging, right?
Oh man, I
Yeah.
tell you, '08 to 2010, specifically '08 and '09 were very, very hard.
Yeah.
And it was tough. Then my husband was like, I got it. Like,
Yeah.
don't worry, don't stress, but we felt it everywhere.
Yeah.
The industry almost dried up to nothing. I mean, overnight, we would literally watch companies close,
Yeah. I
because
remember
we would
that.
pull it up online, and there was a site called Implosion or something, and we would pull that site up, and you would watch each company just go out of business, go out of it by the minute.
Yeah.
It was the scariest time. And honestly, while we were going through, we're like, there's no way we're going to come back after that. But I found that homes are always valuable
Yeah.
no matter what. There's a statistic that says, I think it's over the last 60 years. For the last 60 years, the national average appreciation rate on real estate is 70%. I'm sorry, 7%.
Yeah.
7%. And that speaks a lot, because we just talked about '08 and '09.
Right.
But if you think back to 6 decades ago, a lot has happened.
A lot.
uh, you name it. We've had some pandemics, we've had some civil unrest, we've had some economical crashes, right?
Yeah.
That the housing market caused, might I
Right.
add. There's been a lot. However, the resiliency of real estate has impressed me so
Yeah.
much, and it just shows me no matter what happens, you still deserve your own stuff.
Yeah.
You still deserve your own home. You still deserve your own property. Something that's appreciating with your name on it, you deserve it.
Yeah.
So I tell that to my clients. I do, especially if it's their first time, because there's lots of fears right now, still, and uncertainties dealing with real estate. And when I talk to them, I ask them, why do you want to purchase a home then? What's your reason?
Yeah.
And what's so funny is everyone has different reasons as to why they want to purchase, why they want a home, why they want to even get involved, why they want to buy an investment property. There's different reasons why.
Yeah.
But I tell you, I have had to navigate for each client, from an emotional mindset to just some black and white hard facts.
Right.
Such as the 60%, such as the tax break, such as the ability to build equity, such as the appreciation rate. And I tell you, it just brings more perspective for them, other than, well, I always wanted to do this, or it's been a dream of mine. Not that those are bad reasons, but we've got to pull a people
Right.
from emotionalism at some point to the black and white of making solid decisions, where they can say,
100%.
hey, this is why I'm doing this.
Right.
I met with a young guy, and he runs a kitchen at a well-known restaurant, and he's like, man, it's just time. I want to do this, right? And so I went over a few reasons why else owning your own real estate makes sense. And I'm telling you, by the end of those facts just being revealed to him, he was like, "How can I get a house? Like, I want to get a house right now." I'm like, "Yes,
Yeah.
that's the excitement I want." There's
Yeah.
nothing emotional about it, really. If you think about how you deserve something working for you,
Right.
no matter your age. I bought my first home when I was 22 years old,
Yeah.
with no clue of what I was doing, but I was tired of getting those little landlord letters. That's it.
Exactly. And paying the rent for somebody else. Yeah.
Well, there was consistently the rent is going up. That's
Yeah.
what the letter was every single time. So I thought my little payback was, well, I'm gonna move and find another place to rent.
Yeah. Same
Plot,
thing happens.
plot twist.
Yeah.
It's gonna happen there too.
Yeah.
And I'm like, why do they get to do this? I really didn't know.
Yeah.
I didn't understand it. And I said, well, maybe I could have my own place.
Yeah.
And that's exactly how I went into it. Very green, not understanding. But man, I got my own place. I scraped up money to get it. I think my down payment was like $3,050. And when I tell you that was like giving my kidneys,
Yeah.
okay?
That's a lot of
Scraping
money
for the money.
coming out of college. Yeah.
Oh, goodness. And at that time, I was still in college. And yes, you can buy a home while you're in college. I just want to say that. But I can remember doing it terrified, but still excited. You know what I'm saying? Not knowing what it all meant. Well, I was young and married, and I kept having babies. And babies somehow find a way to magically shrink your house.
Yeah. Yeah.
So in 3 short years, I ended up having to sell the home. I loved the home, but it just no longer worked for me. I remember doing my laundry, and I dropped my little bin down on the floor, and I was like, I gotta get out of here.
Too small.
This house is too small.
Yeah.
Okay, and so we listed it for sale, and I walked away with a little check for $22,000 that I was like, who is this for?
Yeah.
What is this check?
Equity.
It's like, this is your profit from selling your
Yeah.
home. So, of course, I took a chunk of that and put it on the next home and did the same thing. But that right there was not taught to me.
Yeah. You just learn that by trial and error. Yeah.
I don't want it to be trial and error.
Yeah.
I want people to, especially in our community, to be able to go into this process understanding what this means.
Yeah.
Not just the pride of ownership, but what are those numbers looking like and what's that going to mean for me over the next 3 to 5 years?
Yeah.
So, anyways.
I think people get caught up in the like the '08s, the '09s, and they say, "Oh, well, I don't want to invest in real estate because, it could crash. The cycle to crash is, every 8 to 10 years it's going to happen again." And I always tell people, you only feel the loss when you sell it. If you never sell it, does it? I mean, yes, it might impact your net worth because your net worth may go down if the value goes down. However, if you don't sell it, nothing really happens. You wait, you hold it,
Right.
you wait for the market to correct, and then that value goes back up, hopefully higher than what it was when it fell, and now you're back in a good place. Real estate's one of those things where if you sell it at a good time, you can make a lot of money. But then once you sell it that one time, you get the equity or whatever, you can never get the equity off the house again. It's gone.
Right.
But if you just keep it and you leverage it, meaning maybe go get a HELOC to go get you another property. I mean, there's so many different things that you can do, but you got to get the property first.
You got to get the property
You got to
first.
get the property first.
And understand the resiliency of real estate.
Yeah.
I mean, it's just always something of value in our nation. We value ownership. We value that. You see that in the tax breaks. You see that in how the values change no matter what, And to something you said earlier, your point about, hey, if you hold it, you'll see it bounce back.
Yeah.
That's so true. I had my second property, and it happened during '08 and '09. Like, I owned it during '08 and '09. I had owned it about 3 years, and then that's when the crash happened, and held on to it. And you're right, it exceeded my expectations.
Right.
Just from holding it. So I think that goes along with having access to that type of knowledge too.
100%. My goodness.
I'm not sure people have that.
Yeah.
And you would think that they did because of all of the information and data we have to our fingertips, accessible to our fingertips. But what do I look up? What do I
Yeah.
look for? So I think that more people need to know about the value of ownership.
Yeah.
Whether you're holding, whether you're letting go, we've got to understand our goals and our reasonings why we're doing what we're doing, and make sure everyone understands they have the right to do that.
Yeah. And knowing your options, right?
Mm-hmm.
That's something that working through the process with you, you provided multiple options.
Mm-hmm.
And you're like, what works best for you?
Mm-hmm.
What are you trying to accomplish?
That's right.
And I think that's so important. And not many people know they have options, especially when you don't know things like your credit, when you don't know things about what you can get and about the knowledge about different mortgage products and different real estate strategies. And when you don't know these things, people can take advantage of you.
Oh yeah, every day.
And they tell you what you should do instead of offering you options, and they're making decisions for you.
Mm-hmm.
And so tell me about your process. Like when somebody comes in and they say, hey, I want to buy a property.
Oh yes, yes. Thank you so much
Yes.
for that question. First and foremost, I lead with professionalism because people deserve that. And I do want to meet my clients, especially if it's their first time buying a home.
Yeah.
This deserves more than a conversation in passing over the phone or a few text messages or an email. You can either come into my office or we're going to hop on a Zoom call.
Yeah.
Okay. From there, I have a professional presentation for them where I teach them about the loan process. But one of the main things I say at the very beginning of my appointment is this, is that everyone deserves my 3 C's. They deserve confidence, they deserve to be comfortable, and they deserve to be competitive. And they have to be those 3 things.
Yeah.
Okay, they have to be, no matter the market. You have to be confident, you have to be comfortable, and you must compete well when it's
Yeah.
time to negotiate on properties. And I watch the body language of a client when I even say that. And they go, I guess I do need those.
Yeah.
They know they need it. They just don't know they need it. They don't know to tell me they need that. But I know they do, right? Because guess what? If you're not confident, if you're not comfortable in what you're getting ready to do, you will not compete well. And if you don't compete well when it comes time to negotiate, you won't get the property.
Right.
And if you don't get the property, you're going to play with your mind and think, oh, well, maybe this isn't for me. Well, you just skipped a step. So
Yeah.
we got to go back to comfort and confidence. What I mean by that is I can't have someone happy with the home they're going to get and hating their numbers. And I can't have someone loving their numbers and hating their home. We've got to find a way to get right in that middle. So a part of my process in meeting with the client is determining that right there. What does it take for you to be comfortable? What's your max comfort? You know, what's your walk away? Like, what would make you walk away from everything? Okay, well, we're building thresholds right there. Everybody has them.
Right.
Nobody has an endless ceiling, you know, or no ceiling. You know, there's a threshold for everyone. They just don't know it. So
Exactly.
I think I do a great job with discovering what those boundaries are. I know when to push them and when not to, you know, just based on the questions that I ask. And of course, I do educate them on how they are to move and communicate in this type of process as well.
Yeah.
You know, even though there's so much accessible to your fingers, you know, online and all that, you are still this at the center of this process. So I need you to be communicative as well. I need you to express when you feel certain ways, you know. I need you to ask those questions. I need you to do what we say, you
Yeah.
know, and you will succeed. You'll get to your end game every single
Yeah.
time. But yep, so I do have that meeting, and I don't really suggest people shopping until they've had that. If they know there's some questions, if they know they're not confident, slow down for just a second because the loan process will go quick with
Right.
our team. But the beginning part of it, we got to respect that because everybody's not ready to pull the trigger right away unless
Right.
they speak to certain things. So for me, I just say I just create smart buyers.
Yeah.
You know, people that understand, that are confident, that are ready to sign a line when they're ready.
Yeah.
And they'll be the best buyer out there.
Exactly. In terms of getting a pre-approval,
Mm-hmm.
like what is that timeline do you tell your clients? Like come to me when you're 90 days out, 120 days out from buying, or is it 60 days? Like what is that timeline you tell your clients that they need to come and get a pre-approval letter right before they buy? Because you
No timeline.
no timeline.
Mm-mm. If you have in your mind, I want to get a home, then I want to talk to them.
Yeah.
That's the best time is when it's on their mind.
Even if it's 6 months down the
Does
road.
not matter. 6 months,
Yeah.
a year, because I've had things happen like a person tells me they're a year out. Okay, I look at their information, I meet with them, they're actually 3 months out. you know. And then I've had people that think they're ready now and they're a year out.
Yeah.
But they don't really discover that until they have a professional conversation.
Right.
You know, I don't expect people to just know where they are in reference to time. I
Yeah.
believe that's a part of my job role.
Yeah.
So I'd recommend if it's on their mind, let's connect.
Yeah.
You know, if it's to buy your primary residence, if it's to move up, if it's to get an investment property, I want to talk about it. You know,
Yeah.
and kind of gauge the timeline based on what they have available, what information they can provide. You
Yeah.
know. So if they're ready, then we'll figure that out. If they're not, then we'll figure that out and we'll help them have a goal of a timeline after that.
Yeah.
Mm-hmm.
So I'm sure you get a lot of questions about, oh, how can I get approved? The question that I get a lot from my students or people in the comment section, they may say, when's the best time to refinance? Or when's the best time to buy a house? And my question to the house part, the refinance part, I'm saying talk to your mortgage lender. When they say when's the best time to buy a property, I always say now. If you have the money now, you're positioned now, what are you waiting for? And then I get, well, the interest rates are high. Yeah, but the interest rates are going to change. If the interest rates are high, 9 times out of 10, the property's a little bit lower. Marry the property, date the rate. The rate's temporary.
Yeah. I have some thoughts about that. So the right time to buy for a person is when it's the right time to buy for them.
Yeah.
That goes back to assessing the need and why. You know,
Yeah.
is there a reason for it? Are you getting married soon? Is your family growing? Is your home still meeting your lifestyle? Like, we have to assess why. You know, I don't think there's anyone buying a home that does not need to buy one or does not want to buy one.
Yeah.
So that's why their timing is always right. And one thing that I do is I'll ask them, what's your comfort level for a payment? I'll just ask that question, you know, and then I'll ask, well, what's your max comfort level for a payment? You know, what would make you walk away from the perfect house? If it's $1 over this a month, what would make you walk away?
Yeah.
And they'll give it to me. And we then discover a price range right there based on the current market. So it's not a rate-led conversation.
Yeah.
It's a needs-led conversation. It's comfort, and then it's max comfort. So we build their threshold right there. I hardly have to have rate conversations.
Yeah.
I really don't. I'll build the options based on the current market, based on their needs. And, you know, 9 times out of 10, they'll find what they want and they'll move forward. So to someone that is wondering, when should I buy a home? We should talk about it.
Yeah.
You know, we should have a conversation to assess the needs. Why would you want to buy one anyway?
Right.
What's the motivation behind it? You know, and what do people need? I thought you asked that question. So I teach this. There's 3 things we look at when it comes to qualifying someone for a property. We're looking at their assets, like, do you have anything of value, like liquidable assets, retirement accounts, checkings and savings accounts. We'll ask if they know up front if someone's gifting them funds. And a little known fact, certain loan types will allow, if someone has a thing of value such as artwork or an automobile or furniture,
Yeah.
they could secure a loan against that and use that money to buy their home.
Really?
Yep. The majority of the loan types will allow that.
Yeah.
Most people don't know that. So I don't know if you ever noticed or if you've ever paid attention to it, but there's been mortgage applications. Well, they'll ask you about your assets, but then they'll have like non-liquid items that
Yeah.
they can list. So
Yeah.
it could be a boat, it could be a car, it could be art, it could be whatever. And as a matter of fact, I remember when I bought my first home, I filled out, I have a keyboard.
Did that count?
I hope they
Like something
shredded
like
that document.
Yeah. I mean, it has to be something of what? Is it a certain value, a certain dollar amount?
Yes,
What's
yes.
that value?
Of a keyboard back then, like a musical instrument?
No,
Oh.
like of in order to be considered for that portion, like to be considered for
So there's no
non-liquidable
requirement.
assets.
Yeah, so no. There's no value
Yeah.
requirement there, but we would have to prove that it was valuable
Okay.
enough for you to secure the loan you got against it.
Gotcha.
So say I had a car with no balance, no loan on it.
Yeah.
Then I could go to the bank and say, listen, this is the only way I could probably access thousands of dollars right now.
Yeah.
You know, they would do their assessment of value and they could secure a loan and use that car as collateral.
Okay.
You know what I mean?
And that, yeah, because
And they could
normally
use that money.
I was under the impression that if you have to go and get a loan to use that loan as your down payment on your property, that was like a big no-no to the lender.
That is generally true.
Yeah.
but it depends on how you got it and why. So if it's secured by
An
something of
asset?
value,
Yeah.
something of value, and we can prove that value with your documentation that you got from the bank or wherever you got the funds
Yeah.
from, then that could be used.
Yeah.
Isn't that crazy?
Interesting. Got me thinking now, girl.
I know.
Wow.
I
Is that
know.
new?
Not necessarily. It's just
Okay.
not really used
Yeah.
because the general idea in people's mind is, oh, I can't borrow money
That
to.
was my
Right.
thought. Yeah.
So what I don't want is for someone to go and just get a personal loan
Yeah.
unsecured, come to me with all this cash and say, okay, now I'm ready. That is likely going to cause an issue.
Okay.
But if it's secured with something of value,
That's interesting. But no, like, don't come and pull money off your credit card or anything like that.
so if someone wants to gift someone funds, they can pull it from credit card.
Girl, you dropping gems. You know, people right in their house right now, like, Mama, Mom, you still got that Amex card? Can I pull that 20,000 off that Amex card?
And see,
That is good
now we don't even have
information.
to document gift funds anymore if we get them to title in a certain way.
Yeah.
It used to be a cumbersome process to document, hey, where did the donor get the money from?
Yeah.
Well, now in most cases, I'm saying we can have the donor wire the money straight to title, or we can have the donor get a cashier's check made straight out to title, and we never have to document where the funds even came from.
Interesting.
That's interesting. Oh, and we were all happy when those
I'm
changes.
sure. I'm sure.
Well, the thing is, people have abilities, but they just don't have it documented
Right.
properly. So, donors can,
Yeah.
pull from credit cards or whatever,
Yeah.
to help people get into their homes.
So why is the underwriting process so much challenging now compared to prior to 2028 or 2008? Why is that?
Oh, that's such a great question, and
Yeah.
I'm so glad you asked that. So, I will tell you this. Prior to 2008, I used to make the joke, Kermit the Frog can get a house.
Yeah.
I mean, nothing had to be, nothing had to be verified.
Yeah.
You call and tell us your name was Mickey Mouse, and
You getting a
that we
loan.
got a no doc loan. I mean, it was the era of subprime. Like it was just at a high rise. I mean, it was something you could probably see. This is going to crash soon.
Yeah.
Like this is not going good. And during that time, there was so much mortgage fraud going on.
Yeah.
To be honest, and beyond that, not just mortgage fraud from the buyer side, there was predatory lending practices taking place. Lenders were putting people in loans that were just beneficial to them. High interest rates.
Yeah.
It used to be where a lender could determine what rate a person could get based on risk or based on what they wanted to actually make on the loan, to be honest.
Wow.
It was very, very dangerous. That
Yeah.
could not have lasted. That has changed now. But then documentation fraud, ID fraud.
Yeah.
I mean, whoever was making those fake W-2s and IDs back then, I know they made pretty good.
Oh,
then.
yeah.
They're probably not happy about it now, but that is the reason things have gotten more stringent,
Yeah.
In short. All I'm saying is that bad people have messed it up for the good people.
Yeah.
So many checks and balances. I can remember, I want to say back in 2000 and maybe between 2011 and 2013, there were some major changes to the lending industry that we were like, oh my gosh, like who's going to keep up with compliance and who's going to keep up with all of these job roles?
Yeah.
Well, that was the thing. We began to see more job roles be created in just the compliance department
Yeah.
in the lending world because so much red tape started being just applied to the process.
Yeah.
And now underwriters had to ask for more and they had to double check and triple check and quadruple. It used to be where you could pull a credit report and that's what you needed.
Exactly.
But now against the credit report, there's
Oh, it's
fraud
so many-
reports that are
Yes.
pulled. I mean, it's a process.
It is a process, but it's a worthy process. Like
It's a worthy
It's one of
process.
those things where if your documentation is on point, you have nothing to hide. What you said you have it, and you can prove it. Yes, they may ask you for a little bit more extra documents, but it's one of those things where, okay, I'm not going to stop the process
Right.
because they asked me for another document. Like, I'm trying to build wealth here.
Mm-hmm.
And if I
And
need
that's
another
the thing.
document, I'm just going to turn in the document. Yeah.
And that's what I tell people. If you said it, then we just need to be able to prove it.
Yeah.
So a part of our process at the very beginning is where we go in. Like we really try to build a very nice profile for a client before even going to underwriting, just to try and ease up that process a little
Yeah.
bit. Because it used to be where you could just throw a minimal file at an underwriter and just and leave it to that. But if you do that now, you will likely get asked for so much more stuff.
Yeah.
So just make sure you're cooperative at the very beginning of the process. Go ahead and get the updated pay stubs and bank statements. I'll tell you,
Hey, multipliers, it's Tayisha Beard inviting you to the Legacy Summit 2026. It's going to be April 25th of next year at the Gonzalez Pace Center in Gonzales, Louisiana. If you've been to the Legacy Summit 2025, this one is going to be next level. We have a tax strategist that's going to teach us for 2 hours how to save hundreds of thousands of dollars that I have in my taxes for having real estate. And then we're also going to have an AI professional there that's going to tell you how to scale your business and use AI for efficiency. We have a panelist of women developers, and there's going to be so much more. So now is your time to get your early bird tickets at www.mylegacysummit.com. Early bird tickets are on sale through October 30th. After that, you can still go to mylegacysummit.com to get your general admissions or VIP tickets. If you are a sponsor and would like to sponsor us, there's packages for sponsors. And if you want to be a vendor at the summit, also go to mylegacysummit.com to get all your information about becoming a vendor.
in the last year, I've seen fraud attempts.
Really?
I have seen people attempt to screenshot a fake pay stub. Like
Really?
things
Just
like
to
that.
just to be able to quote unquote afford. But do they not know that's hurting them? Because if you can't afford it, believe me, you may be making some decent money now thinking that you can, but eventually reality sits in
Oh
and
yeah.
things normalize. You're not getting the overtime or whatever, and you can no longer afford that house, and that's not good for you.
I mean, that's how you think.
Yeah.
You have a good head on your shoulders, but there are some people that just want to see how far they can go.
Yeah.
Just how far they can go until they, I don't know. We disclose that mortgage fraud is investigated by the FBI. Like, this is no joke.
Yeah.
But people still make those types of attempts. So this is also why there's so many layers of verification. Like if
Yeah.
you tell me that you work at ABC restaurant, let me tell you something. We're gonna get your pay stub. We're gonna get your W-2. We're going to do a verification of employment with ABC. We're going to Google them. We're going to look them up.
Yeah.
They may make some phone calls to see if they're still in business, things like that. Because, again, people have tried to say they worked at places that don't even exist.
Right.
So there are more verifications, more third-party verifications that take place in the mortgage process.
Yeah.
Just to make sure that it's even true.
Yeah. Look, and I don't blame any company that's doing that, because even as a landlord, there's certain checks and balances that I'm doing before moving somebody in, because I don't want to have to evict you. It's easy to get somebody in. It's hard to get them out. I mean, because
Yeah.
there's tenant rights as well. And a lot of people prey on that. They know the tenant rights, and they go and you skip steps because you're trying to, desperately rent out your property, and you put somebody in there that shouldn't be in there. And then it takes sometimes months.
yes.
And there's certain states that are tenant friendly, like have tenant friendly laws to where they will go against the landlord to protect the tenant.
Wow.
And it may take months, years, or whatever to get that tenant out of your place, and they still not paying you. So you got to make sure that, to your point, checks and balances. Nobody's exempt. Checks and balances.
Yeah, the vetting
Yeah.
process is very important. And there is nothing more rewarding for me as a mortgage loan officer to have cooperative clients that are like, here's my stuff. Here you go. What else do you
Yeah.
need? It's in. I mean, you were that way.
Yeah.
You were like, okay, it's already in. What do you
I
need
was like, what
next?
else you need?
Oh my goodness. I'm
Yeah.
like, can she just clone herself? I don't know. Can I say that out loud on here? Yes, but that is that's a part of this process that I think some people take for granted.
Yeah.
Like, and it's a part of the preparing. So you asked that question earlier, where when should someone start? So suppose I have a business owner that has only been in the business for maybe a year. and they file their taxes one way, but they want to take advantage of other loan products that require 2 years of taxes. That person should talk to me.
Yeah.
Business owners, self-employed persons, they should talk to me, because now we're in the space where there are more creative options for business owners, but it's not a last minute decision either.
Mm.
Like, it's something where they must sit down and talk about it. And I say this all the time. Business persons do have a huge advantage of saying, hey, this is my goal as a business owner, and this is the clientele I want, and this is the area I want, and this is my target market, and here's my target income. But they cannot just dial in a mortgage. They've got to strategize more versus
Yeah.
someone that's W-2'd. They don't have those options that says, oh, this is my income, but they can sometimes get their homes faster.
Yeah.
Right? So my self-employed people, I want them to do a better job of planning on what their goals are when it comes to home ownership, property ownership, acquiring more property, in state, out of state. Just have conversations about it, and don't wait until you thought about it
Yeah.
and want it tomorrow. You know
Yeah.
what I'm saying? If you think that's within the next year or two of your business plan, then we should talk now.
What options do they have for business owners? Like,
Oh,
what mortgage options? Because
mm-hmm.
I hear there's so many more than just the FHA conventional, like on a personal per se.
Mm-hmm, mm-hmm. Yes. So aside from the traditional, regular, government insured, government regulated loans, there is something called non-QM loans, or portfolio loans. We call them that too. But these are for your persons that do qualify for a home, but they can't quite prove it by their income documentation. Okay. Or maybe they file their taxes a certain way, for their own reasons, and that does not quite align with the what would be required for a traditional mortgage.
Okay.
Then we would go outside of the box and say, hey, it's clear based on these bank statements that I have here, this person does make money. They've got the credit, they pay their bills, they can afford the home. Okay, let's structure something different for them. So we call those bank statement loans.
Mm.
Um, if they've had a good relationship with like their CPA, they could do a profit and loss loan. So it's where they use their P&L. They use their
Never
P&L to
heard of
get a
that. Okay.
property. And then there's some that want to acquire investment property, but literally their funds are tied up over here, or their income comes from this property or that property, and then a little bit from this business and a little bit from like my multiple business owners, and maybe a couple of properties here and there. There's something called the DSCR loan. That's a
Yeah.
great investment property loan.
That's what I did, right?
Yes.
Yeah. Okay. That's what I thought. So I was like, that's the one I did. Yeah.
Yeah, you don't have to prove any income documentation
Yeah.
really. It's just based on the trajectory of what that property could do.
Yeah.
And I think those are fantastic, especially if you're buying out of state, or you're interested in growing a portfolio but don't want to, or you can't prove traditional income documentation.
Yeah.
You can get Airbnbs. That's how people are getting them.
Yeah.
They're getting Airbnbs, condos, Florida, and you don't have to have a seasoned LLC for those. You can get them in your personal name, or you could be in the process, say, you know what, I do want to get an LLC for this. I want to put this property under my LLC.
Yeah.
It could be a day old. Doesn't
Really.
matter. It could be in the process.
That is
Right?
gems. Yeah.
And then you can go beyond that into what I call the commercial world. This is where it stops reporting to your credit. But this is where we could do more like multi-unit properties that are above 4 units. Maybe you want to get into apartments.
Yeah.
Maybe you want to get into fix and flips. Maybe you want to acquire property, but you don't want it to be in your personal name. You'd prefer it to be in your business name, and you just be like a signer or a guarantor. You could do that,
Okay.
and that could stop incumbent upon your actual DTI.
Okay.
So those properties go strictly under your business.
Yeah.
Yeah.
And is that a conventional where you would need 20 to 25% down?
Well, it's not conventional, but yeah, those typically do require 20, 25, and depending upon the credit, it could be up to 30% down.
Wow. Okay.
Just depends.
Yeah.
Because remember, it's not even showing on their credit.
Yeah.
They're just going to be the signer for it.
Is there any loan that they have out right now, be it business or personal, that it's not an FHA, it's not NACA, it's not, what's the other one? An
rural
owner
development.
occupied conventional per se. Like, is there anything that would you wouldn't have to put up as much money, like that 20 to 25%, because I have a primary residence, so I don't qualify for FHA. So everything I've been doing have been either DSCR or conventional, just a conventional mortgage. And that requires 20 to 25% down, which means it's taking a lot of my capital. All my money's tied up.
Yep.
I don't want to tie up my money. Is there other loans out there for people like me, other real estate investors, other business owners, where they can come up with less than that 20 to 25%?
Well, when it's just a move-in ready home, you're typically going to still have that 15 to 20% down, 25% down, depending upon the credit situation.
Yeah.
But there's another way that investors have been acquiring property where it's minimal out of pocket, and it's through the fix and flip line.
Okay.
So the main thing with fix and flip loans, or that it's that you have to have experience fixing up a property, whether you're going to sell it or rent it out. You've just got to have experience doing it.
Yeah.
So this is where you'll see people partnering with maybe a builder or a contractor, adding them to the LLC and allowing them to kind of be that backbone for them, that experience for them, get that under their belt a couple of years, and then they can go off and do it themselves.
Yeah.
But with fix and flips or rehab loans, you are able to, in some cases, you can rehab and borrow like up to 100% of what it will cost to fix the property. Yeah.
But is that short-term financing?
Yes, that's usually about a year.
A year.
In some cases, it's interest-only payments for the entire year,
Yeah.
or you could possibly defer them. It depends on the situation.
Yeah.
So me, as a broker, I have access to so many different colors of,
Yeah.
if for lack of better words, of how to structure a loan based on what your goals are. So you see how you just said, man, is there something where I don't have to tie up so much money?
Yeah.
There's a way to do it, but we got to talk about that.
Yeah.
You see. So yep, there's that. And again, back to the traditional conventional loan, they do allow for 15% down.
Okay.
And it's typically where they like to see you have at least a 680 or above
Yeah.
credit score for that. But you can get into those with 15% down. I mean, that's not quite 3%, but
It's
less
better
than
than 20 to 25%.
Mm-hmm.
Yeah.
And with a conventional loan, if you're looking into multi-unit properties, off the top, they want 25% down.
I know. I know.
So for those, if someone has the ability to do a bank statement loan, they could possibly get by with 15, some cases 10% down.
Okay.
On those. It just depends on them and their situation.
So my next deal, I'm making a mental note. Next deal, we need two bank statement loans. I can come up with 15%. Or 10%. Did you say 10?
Depends
You
on the
said
credit.
10%?
I did say that. I said it out loud. Now that could
Okay.
change tomorrow.
Okay. But today.
But today.
Today.
As of today, right now.
Okay.
Uh-huh.
All right. That's so good to know. That is
Yes.
so good to know. And I think that stops a lot of people from buying it. Like, I just don't have the cash to come out of pocket. So there's options for people.
Well,
If they don't
absolutely.
have the money, there's other ways of making this happen. It's just
Absolutely.
educating yourself, getting with the right person. I think another thing, too, is, see, you're a broker. If you go to one particular lender, you know, that lender can only do what their company or their
Exactly.
carrier or whoever lender does. You have opportunities to work with multiple products. So you work with also multiple lenders.
Absolutely.
Yeah.
Absolutely.
So all of that matters, opposed to just going to a State Farm in particular. I'm just using that as an example. So if you're looking at insurance, if you just go to State Farm can only quote you State Farm.
That's right.
But if you go to a broker, that broker can shop you in many different places.
That's
So
right.
same thing with being a lender.
That's right.
You're a broker, mortgage
I'm a banker
broker.
and a broker.
Okay.
So this means we have our own line where we can loan our own money.
Yeah.
And then we can loan other people's money.
Wow.
You know,
Okay.
and that's great because being a broker gives me access to, like, all in-house products aren't the best.
Yeah.
They're not all of them, right? So you want to be able to create options. This is again why I like having conversations, because I'm just assessing.
Yeah.
I'm hearing what's important, thinking, what do I have in my Rolodex that's
Right.
very close to that? And even for persons that want to buy a primary residence, most people think in order for me to get down payment assistance, I have to be a first-time home buyer. That is not true. For me, I don't care if it's your first, second, third, fourth, 15th time. Okay? If you're going to live in the property, then there's options for you. Some people also think, well, I make too much money
Yeah.
to get assistance. Not for my products. I have no income cap on my down payment assistance programs.
Yeah.
Okay. So that's important because, you know, you have people that they make pretty good money.
Right.
But they still need help.
Exactly.
They
Or
shouldn't be
if
X'd
something's
out because.
available, tell me about it. So, okay, so to that point,
Mhm.
somebody comes to you. They don't know that they can qualify for down payment assistance. Are you sharing that information with them?
Absolutely,
Yeah.
because I have it.
Yeah.
Right? So, again, it goes along with assessing and understanding everybody is different.
Yeah.
The needs are different. The challenges are different. So, if we talk and they say, well, look, all I have saved is like $8,000. And I don't want to use all of it because I do
Yeah.
want to get some furniture in my house on some move.
Right.
I'm like,
Or have some
okay.
reserves.
There you go.
Yeah.
Because I've got to live after I
Right.
move into my home. And I'm like, okay, what if I get you some help? Right? And so I'll present the options.
Yeah.
It's all about presenting the options and allowing them to choose from there.
Yeah.
Mm-hmm.
I love that.
Yes.
So if somebody's looking to become an investor, and I work with a lot of women investors,
Mm-hmm.
as far as getting a mortgage, like what would you tell them? Like, go find the property, come tell me what you're looking for, or come talk to me first and let me guide you on what you should be looking for.
Well, that's a loaded question simply because of the ways that investment properties can be acquired via financing.
Yeah.
So if this is just more of a traditional, hey, I would like to buy an investment property because I want to rent it out. Okay. Are you looking to do this in your personal name or are you trying to do this in your business name?
Yeah.
That would make me, ask different questions. So if they're wanting to do it in their personal name or they do have an LLC but they'll vest in it, okay, then that's non-QM all day.
Yeah.
But if you've got somebody that says, well, I don't want it to go on my personal name, I want it to go on my business name, these are the ones that need to go find the property first because I remember, okay, I'm not putting it on your credit. I don't have income documentation on you. So the biggest thing that of value in the whole deal is beyond your credit backing is the
The
property
property.
itself.
Yeah.
So what are you trying to buy? Give me the address. Let me look it up. Okay. If it's people doing it in their personal name where there's more liability on their part, then that's more traditional. Like, let me pre-approve you for it so you can go out shopping.
Yeah.
Right. But with a commercial type of, transaction, I need to see the property.
Yeah.
Do you know that in some commercial lending processes, a part of vetting the property is where is it located? Is it safe? So they'll actually grade the area. There's websites that they go to in underwriting to see if it passes the test.
Wow.
You
No, I
know,
didn't know that.
if it passes the test, it's like, okay, this looks like something we'll do because it's all about the property.
Yeah.
You see, okay, you're fixing and flipping this property. What's your intention for it?
Yeah.
Oh, I want it to be a luxury Airbnb. All right, okay.
Yeah.
So they'll run tests on that and see where it is and does that make sense?
Yeah.
You know what I'm saying? It's not a matter of you saying, okay, I want to put a hair salon in the middle of a residential neighborhood. Can't do
Doesn't make
that.
sense. Yeah.
You see what I'm saying?
Yeah.
So it's got to make sense.
Yeah.
Yeah. Yep.
I love that.
Yeah.
Okay. So if people are interested in getting a mortgage, how can they find you?
Oh, you can find me. I am on Facebook. I am on Instagram. And right now, I honestly cannot remember my handles, but I will give my number. My number is 225-305-6196. A quick text will do just fine. You can find me there. You can also reach out to me via email, LaToya at mychomeloans.com. Let's have a conversation. We can set up an appointment and assess your goals and hopefully get you to where you want to be.
That's awesome.
Yeah.
Now, to that person that says, "Hey, I'm not looking for a mortgage, but I want to do what you do. I want to help people get into their dream homes or get into real estate investing." What would you tell that person?
Well, times have changed since I got into the business. The requirements to get in have changed since I got in the business. So I probably wouldn't be the best source of actually getting started with the mortgage. But I do know that everyone does have to start out with the education. You would find like the nearest mortgage educators in your area, or you could possibly Google it, and see if there's some online options. For me, I did like an in-person class. I don't even know if they do that anymore. I honestly don't know. But you want to get educated first, and then you would have to, from there, find a sponsoring company that has the capacity to train you.
Yeah.
Training is so important in this industry. Yes, anybody used to be able to get in, but that's not the case anymore. You want to be able to be properly trained and honestly know why you want to do it. Understand it. Understand your goals. That's the
Yeah.
main thing I would tell
Yeah.
them.
So you are really helping people like create legacies. I know, with the real estate portfolio I have, this last one that I just put into the portfolio, I actually turned the bottom units into a group home. So like we're doing
Wow,
some
that's
big things. And
incredible.
thank you so much.
That's so wonderful.
And you helped me to get that process going. You made it super
Mm,
easy.
mm.
I mean, I
Wow.
was actually almost to the closing table with another lender. And I remember I reached
Mm,
out to you and was like, hey, I'm about to sign. But I remember speaking to you. You actually had done a Zoom call. I don't
mm,
know if you remember this. I don't know if we talked about this, but it was probably 2 years ago. You were on a Zoom call. You were working with the lady that I knew.
mm,
And I don't know how that, if y'all close anything or not, but she said, hey, I'm working with somebody and I think she'll be great for our call. So I asked you to get on our call. It was a Zoom call. You did
I
a Zoom call. You remember
remember
that?
you were on that
I
call.
hosted the call. I hosted the call. And
Wow,
I
my
remember
goodness.
just from that one time you
Mm,
got on that Zoom call, I was about to close with that other company and I said, that was a lady that was on a Zoom call with us
mm,
2 years ago. And I went back in my phone. Took me a while because I had to go through 2 years of messages. And I pulled your name and I said, I'm calling
wow,
her. And I called you.
wow.
And you were like, I said, here's what I got. I sent you everything. I said, I want to do business with you. Can you get me a better deal than this? And you said, send it to me.
Mm,
And then I think a few weeks later, we were doing business.
let's go.
We were doing business. And
Oh,
so
wow, the
you're
chills I
helping.
have.
Yes.
Woo!
That's what I'm saying. Like,
Wow.
you never know the impact you make on somebody. And in that Zoom class you did for me, like, you trained for maybe 30 minutes to a group of people you didn't know. You
Mm,
knew the lady that I knew, but you didn't know anybody else on that call. I called you and asked you, would you do the Zoom call? And you said yes. You didn't even know me. But you
wow.
made an impact on me so much that I remembered you 2 years later.
Mm,
You closed on my property in March. You just closed on my mom's property like a few
wow.
weeks ago. And believe me, I'm sending you more. And there's over
Let's
4,700
go.
subscribers on this platform that we
Wow.
have today. It's going to be
Wow.
more in the next few months. People
Mm,
from Jamaica, United States, South Africa, Canada. I'm interviewing somebody from Canada in a couple weeks. So you're being exposed to so many people because
wow.
of the impact that you made 2 years ago.
Ooh,
And
man.
because you're creating legacies for
Incredible.
so many people,
Mm.
what does legacy mean to you?
Ooh, legacy. So I've thought about that so much just over the last couple of years of my life. And I looked up legacy and saw that the root of it is in Latin, it means a delegated person.
Yeah.
And I'm like, whoa, I'm the person. I'm the person. So for me, legacy means you are the one. Your decisions, your money, your decisions that you do with your money, your relationships, your beliefs, your strengths, your weaknesses.
Yeah.
You're the one leaving that behind. So for me, legacy is my money, my relationships, my choices, my beliefs, my faith, my actions, all of those things. What did I leave?
Mm.
What did I leave? And how long will that last?
Yeah.
It's got to be able to keep going.
Yeah.
And it will. It will. You know what's so funny? I asked my daughter this question. I said, what do you think legacy means? I love to hear it from younger people's perspective.
Yeah.
It's like, what you leave behind? I mean, how simple is
Yeah.
that?
It is. And that can be financial, spiritual,
Oh.
mental. That can be so many things.
Mm-hmm.
And
Mm-hmm.
you almost have to leave a little bit of everything. Because if you
Yeah.
leave one thing, then what areas have you missed
Mm-hmm.
or not taken advantage of while you were here? So if
Yeah.
you're leaving finances, okay, could I have impacted somebody spiritually?
Mm-hmm.
Was my focus just on finances? Or if it's spiritually, okay, I can leave you all the spirit, but did I leave you something financially where you can grieve once
Mm-hmm.
I'm gone?
Mm-hmm.
Or
Mm-hmm.
start something. Go create a business. Go
Yeah.
create something
Yeah.
because of the decisions I've made. So it can go in so many different ways.
Oh, yeah.
Yeah.
Yeah. That's
I
amazing.
love it. Well,
Absolutely.
LaToya, thank you so much for joining the
Thank you.
podcast.
Thank you. Thank you
Yes,
so much for having
we
me.
will do more work together. We will definitely do more
Of
work together.
course.
Yes, we will. Yes, we will. Thank y'all so
That's
much for
so
joining
wonderful.
the episode.
Yes.
Again, we thank LaToya for being a guest on our show. Let me tell you, if you want to know the mortgage business, she's very experienced. You saw the 21 plus years of experience that she has. She's wonderful. She's great, and she's great with teaching you the information and making sure that you make an informed decision. So look her up, y'all, on her social media handles. If she didn't give it to us today, But if you email her, she'll reach out to you and contact you. So thank you again for joining the episode. Leave legacies, please, not liabilities. See you next time.